Hello guys. Welcome to our YouTube channel. Today, we shall be discussing the concept of ITC on capital goods and its reversal. Capital goods are assets such as buildings, machinery, equipment, vehicles and tools that an organization uses to produce goods or services. For example, a blast furnace used in iron and steel industry is a capital asset for the steel manufacturer. If depreciation is claimed on the GST paid while purchasing the capital asset, ITC is not allowed. If capital asset used only for personal use, only for exempted sales, only for non-business purposes, then ITC will not be allowed. If capital asset used only for normal taxable sales, including zero-rate sales, then ITC will be allowed. If capital assets used partly for personal or exempted sales and normal taxable sales, then calculate proportionate ITC. The useful life of capital goods are taken to be 5 years from the date of invoice. Capital goods sent on job work. ITC will be allowed to the principal manufacturer if a capital asset has been sent to a job worker for job work. Condition: such goods must be received back within a period of 3 years of being sent out. Implications: if the goods are not sent back within 3 years, it shall be treated as a deemed supply from the date of sending the goods, and tax would be payable, along with interest, for late payment of taxes. Reversal of ITC on capital goods. Variable used. Formulae, or explanation. DM. DC divided by 60. Amount of ITC, attributable to a tax period, a month, on common capital goods, during their useful life. DR. Aggregate DM, of all those capital goods, which have useful life remaining, at the beginning of the tax period. TAE. This is the common credit, attributable towards exempted supplies, which is calculated as follows. E divided by F, times DR. Where E is aggregate value of exempt supplies, made during the tax period. F is total turnover, in the state of the registered person, during the tax period. Example: a company operating in Karnataka had availed the following ITC on various capital goods purchased in the month of July 2019. ITC on machine A, used exclusively in supply of exempt goods, 150,000 rupees. ITC on machine B, used exclusively in supply of taxable goods, 900,000 rupees. ITC on machine C, used exclusively for non-business purposes, 20,000 rupees. ITC on machine D, used partly in supply of taxable and exempt goods, 450,000 rupees. The company had also made the following type of output supplies in Karnataka in the month of July. Turnover in relation to exempt supplies, 2 million rupees. Turnover in relation to taxable supplies, 8 million rupees. Answer: ITC on machine A and C will not be credited to the electronic credit ledger. 150,000 rupees plus 20,000 rupees equals 170,000 rupees. ITC on machine B will be credited to the electronic ledger, 90,000 rupees. ITC on machine D will also be credited to the electronic credit ledger. PC equals 450,000. DM equals DC divided by 60 equals 7,500. Which is also DR, in this case. ITC, to be reversed, for the month of July 2019 would be TAE equals E divided by F, times DR, equals 2 million divided by 8 million, times 7,500 equals 1,875. So, that is all for this topic. We hope you have enjoyed the video. In case you like the video, press on subscribe button, and click the bell icon. For personalized queries, you may reach out to us at info@bncglobal.in.